Hi, good afternoon. You're watching Closing Trades right here on ET Now, and what a solid recovery in the markets, even though you've got an acutely truncated week up next with both Monday as well as Friday being trading offs. But no, even though we started off a little bit temper, but we're now scaling at the high point of the day. 0.5% higher, almost staging a 150-point move on the index. So a smart recovery is what you have at your hands right now. And barring IT, most of the sectors have made a comeback and are leading to the rebound. Of course, there are laggards from within the private banking space, but I think that's pretty much par for the course now. So not much of a participation coming in from Axis, Kotak, or for that matter, HDFC Bank. But irrespective of that, autos, which has been in a very, very steady uptrend all through this week, they're making a comeback once again. It's the two-wheelers which are actually leading the pack today. So Hero MotoCorp, Bajaj Auto, both holding out very smartly. You've got a Maruti as well, which is higher in excess of 3.5%. You've got a UPL, which is shot up about 4% in trade. Sun Pharma, Cipla looking very good. BPCL for a second consecutive day is seeing over 2% gains coming in. So it's quite a lively market out there. Even for the broader end of the market, it's been a meaningful comeback, although they were, of course, outperforming the benchmarks from the word go today. Indus Tower, Idea, just a few names out there which are actually holding out very, very smartly in trade. So, yeah, any dip in this market gets bought into and very swiftly.
In fact, we are up close to 450 points from Wednesday's low on the Nifty and over 1,000 points in Bank Nifty. And the best part is that it's a trending market. The lowest point of the day actually got made at 920, 925 odd. Remember, in the morning, Kunal was talking about the importance of VIX cracking 7% yesterday. Today, look at that. It went below the 12 mark, 12 reading as well on an intraday basis. Another 1.5% down. Pull up the India VIX and you'll come to know what I'm talking about. So clearly, it's a clear sign of short covering also aiding. Look at how interest rate sensitive is actually leading the recovery. We'll talk about all of that. Went below the 12 reading intraday, but still 2% lower. Amit Khurana is here to talk more about the fundamentals of the market. Amit, I remember we were talking about Vaishali Parekh will also talk to us apart from Kunal on charts. All three of you, thank you very much for your time this afternoon. Amit, you have been cautious / slightly on the sides for weeks in this market. But last 2 weeks, the kind of dip opportunity was provided. Did you utilize it? Tell your clients about buying or still observing? You expect lower levels in coming weeks?
Yeah, thanks, Ajay. I think, so there are two ways to look at it. One, you look at the mid-cap and the small-cap indices and the components. 1/3 of them have corrected by a reasonable double digits in the last few weeks, which is what we had called out last month and seems to have played out as per expected lines. But there's still a fair amount of market breadth, which has not yet corrected to the degree and to the levels which would make us feel to go all in. The second version one can look at is do you start nibbling into the names which have corrected or which are your preferred picks? Yes, we do find some of the pockets which are now emerging and are worth looking at it, but those are very few and far between. So to encapsulate, I think this market is moving into a zone which is showing signs of correction. Some have played out and some are yet to play out, but keep your radars on and at the requisite levels, one would look to allocate money, which is our preferred mode of portfolio allocation, which is bottoms up, and that's what we're playing out for.
Amit, hi, afternoon. Seems like you're all set for holy celebrations already. Where's the color in the market? What is it that you're looking to buy in this recent decline that we've seen in specifically small and mid caps?
So we're looking to essentially back up the same names that were there on our list starting last year's rally, but some of them had become very, very rich in valuation. So it was more of a cool off. So we still like real estate as a theme, which we are backing up. We continue to like Alcobev as a category that we are backing up, and some of the names, while they may have muted earnings for Q4, but we believe structurally India remains a very strong volume growth market and premiumization market on Alcobev. So that we continue to back up. We also believe that there's some of the pockets which have not performed as per expected lines will hopefully form cyclical bottoms, and give us some opportunity, which is more related to domestic consumption names. We continue to like some of the mid-sized banks and affordable housing. We continue to like mid-cap cement, but at a certain price point as the corrections finally end on that space.
Right. Obviously, talking about that consumption theme and aviation theme, that's what we're keeping focus on, because Indigo is actually having their meeting today, and we do have some other highlights that have come in from this analyst meet, which is underway today. Somit is joining in with us to give us more details on that. Somit?
Well, the fresh set of commentaries that are coming in from the Indigo's second physical annual analyst meet is, firstly, they are saying that the Q4 yields are expected to be better on a YY basis. Now, earlier expectation or guidance given by the company was that in the fourth quarter, yields are expected to be flat on a YY basis. But right now, the company is saying that they would be better on a YY basis. So, with higher air traffic, Q4 profitability could be on the better side for Indigo. Apart from that, the new pilot norms that are expected to be implemented from the June 1st are expected to lead to higher cost for Indigo. So Indigo did concur to that view of the analysts, and they also said that they are in talks with the government for delaying this implementation of new norms, because there's a shortage of pilots in the system, and if these new norms are implemented from June of 1st, then that could lead to higher costs for the company, more cancellations, and eventually it could lead to higher fares going forward. That is what the management has said. Now, Indigo has always been in midst of news which is related to grounding because of the engine issues of Airbus, and they are saying that the grounding of situation, aircraft grounding situation would improve over the next 18 months as per them, and they also said that they would not slow down on deliveries even once the grounded aircrafts are on track. Apart from that, they also said that they are in discussion to take in more aircraft on damp lease. They are planning to take around 11 to 12 more aircraft on damp lease. Currently, they have only 2 such aircrafts on damp lease. And on profitability front, when one of the analysts asked them of how they are looking to grow or see their profitability grow over the coming years, given the fact that they are expanding so rapidly, on that the management said that bigger network and bigger airline would mean higher profit for Indigo going forward. So that's one of the key commentaries coming in from Indigo's annual analyst meet.
All right. Let's take a check on Interglobe Aviation with Kunal. And Kunal, you're looking at a slightly softish trade for Indigo today, but it has done phenomenally well in the last 6-8 months, and now they're talking about aggressive numbers. What are the charts? Are the charts factoring in this strength?
Yeah, so I think it's done exceptionally well. You rightly said it, from 1800 levels to 3000, 3200 for the stock in the last, I think, 1 year. I think, Feb or March 2023 is where the stock was almost at those 1800 levels. I think it's done consistently quite well. Even in the last, 1 week, 1 month or so, the stock had actually been making fresh highs for itself. So, the correction was a bit less as compared to many of the other names on the formidable stocks, but I think the stock made a fresh high about the 3,000, 3,200 mark. So I think it's a very strong stock, indicative that the trend should sustain as well as continue to grow.
Okay. That's on Indigo. But, Vaishali, good afternoon, and thank you so much for joining in with us. I want to know, in the auto sector, anything specific that you're seeing on the charts there where you're finding value in any of these names, whether Maruti, Hero, or, what are you looking at over there?
Very good afternoon, all of you. Yes, so auto sector has been doing very well, but we have still been recommending Maruti because, we've seen a good run up in Tata Motors. We have seen in two-wheelers also. Now, TVS is showing a little bit of a corrective move, but I think Maruti still has scope for a further upside towards 13,000 levels. And this is what we have been recommending even in the recent past as a trading strategy. So right from 11,300, we have been recommending this stock, and we continue to stay bullish. And yes, so this is one stock. And I think Tata Motors also, after the retracement that we saw in the last few days that a corrective move had set in, I think Tata Motors is still very well poised with a support of 940. So I would say better it would be to buy in decline, because we would now look at target once again at 1030, 1050.
Okay, on that note, let's just slip into a very short break. Nifty at 21,130 levels, around those levels, keeping an eye out on that. 22,000, I beg your pardon, 130 levels. But we'll slip into a break and we'll be back with more. Welcome back. You're watching Closing Trades on ET now, and it's that time of the year when cricket lovers will gather in front of their TV sets for the 17th edition of the Indian Premier League. Chennai and Bangalore are set, supporters are preparing for the first face-off later today. Let's go across to my colleague Sharad, who's standing by with what's new this season, what's happening in terms of valuation there. Sharad, take it away.
Well, it's very interesting and of course a very volatile month for the markets, but now there is something to cheer about. The IPL's 17th season is underway and today is the opening match. Defending champions CSK will go against RCB today at Chennai, and it's a very important match, especially for the loyalists for both the camps. Also 21 matches have been announced and the full schedule will be coming out. And importantly, this is important because this is a precursor to the T20 World Cup, which is expected to happen in the US as well as the Caribbean. Now let's look at the numbers, how it is in the IPL numbers. If you look at the business part, it's almost up 5 times. 433% up since its inception in 2000. The value currently stands at roughly $11 billion now. That's the big size of IPL. Also the ad spends, that is where the mullah comes. Cricket, almost 6 times it has increased and it's expected to go past the 15,000 crore mark in the current environment. Now let's look at how the numbers have been there and especially what's new in this IPL. There's an end of an era coming in. Captaincies for CSK, if you look, Ruturaj Gaikwad has come in place of MS Dhoni. And another major change in captaincy, that's for Mumbai Indians. Now the current captain is Hardik Pandya replacing Rohit Sharma. Also, there is a twist of rules, something very interesting for the viewers. 2 important things coming. First is now bowlers can bowl 2 bounces in an over. Earlier, of course, the rule was 1 over. And also, interestingly, smart replay system has been introduced. It is a kind of a aid to the third umpiring as well. Now, of course, the impact player rule still remains as it was introduced last year. Apart from the key changes, what are the matches you should be watching out for this long weekend? Of course, we know about CSK, RCB today, but also Punjab King 11s and Delhi Capitals will be coming on Saturday itself. And there'll be a double header, of course, with KKR and SRH also coming in. For Sunday itself, we look at it, Rajasthan Royals will take on the Lucknow Super Giants. So an interesting long weekend is there for all the cricket lovers and a welcome break coming in after a long time.
Okay, thank you so much for that, Sharad. But staying with IPL then, we learned from sources that insurance cover for the tournament is set to witness a big uptick. Now, the likes of New India Assurance as well as National Insurance will be in focus. Let's go across to Anurag, who's joining in with us to give us more details on that. Anurag?
Mega sporting event IPL starting from today will have a mega insurance coverage, also highest ever insurance coverage. IPL 2024 will have a cover of more than 10,000 crore, including insurance taken by organizer, broadcaster, individual teams. So overall insurance cover is of more than 10,000 crore. So this year the premium has also gone up by 20 to 25%, mainly due to the clash of the IPL dates with general elections, Lok Sabha elections. One more reason, the overall sum assured has gone up and premium has gone up due to the increased cost of players. So teams has taken the coverage of players. So mainly the IPL insurance coverage include the cancellation of event, that is cancellation of match due to any unforeseen event, loss of player fees due to any injury to a player, and loss of revenue to sponsors and broadcasters. So these are the major coverages taken by the broadcasters, teams and sponsors. So if we talk about the individual companies, then New India Assurance has given insurance coverage to 2 IPL teams. United India has also given insurance coverage to 2 IPL teams, including Chennai Super Kings. National Insurance has also given IPL coverage this time to organizers as per our sources. So mega sporting event IPL this time having a highest ever insurance coverage of sum assured more than 10,000 crore.
Clearly, everything with got to do with IPL is just going higher. The valuations of the franchise have risen 5x in the last 7, 8 years, 10 years, 2008 onwards. Look at how the viewers, the IPL actually reaches out to, have gone up. The insurance cover has gone up, and of course the valuation of each of the teams. Remember, CSK, Chennai Super Kings, was a free share which got demerged from India Cements at $10. It's now quoting at almost $200, 10x, 20x in 2014 onwards. So that's the kind of, but there is a company which is also associating itself from high growth, got to do with the investing world and the trading world, Angel One. And Prabhakar Tiwari, which was the Chief Growth Officer of Angel One, which had been embarking on a very high growth trajectory last few months now, and it's very clearly visible in the number, is now aiming at collaborating with IPL and has won rights as well. What are the synergies, Prabhakar, which you are looking at in your business model and associating with a franchise such as IPL? I'm sure there is a lot of brainstorming which have gone into it before you took that decision.
Yeah, thank you. Thank you, Ajay, for calling me in your show today. So, of course, IPL as a platform does not need any introduction. But what it really entails is the possibility and growth opportunity that India or New Bharat offers. I mean, it talks about 800 million kind of reach with TV and digital medium. And for a company like ours, which is on a growth path and acquiring close to 1 million plus clients on a monthly basis for last 3 months and 2 million plus clients for quarter 2, quarter 3, we really wanted something which can help us, going ahead. And this is not just a partnership for 1 year, which is kind of tactical or short term. It's a long-term partnership for 5 years, and it is very much aligned with our North Star of reaching out to 1 billion customers as the largest and most trusted fintech brand, and serving them with the power of data and technology. So not only it aligns with our North Star, because we will be able to reach out to 500 million customers just because of ongoing partnership and TV and digital campaigns that we will do. But also when we did the number crunching, including our advertising and sales cost, we realized that we'll be able to manage our overall cost of customer acquisition, combining everything with a platform like this.
That's the other thing, Prabhakar, because you're in such a high growth phase right now. There is that super app as well, and of course, the tie-up with IPL. Wanted to understand if you could really break it up for us, because this 2,000 crore rupees that you're looking to raise, how is that going to be utilized and what's it for?
So on the QIP, we have got shareholders approval and a due process is on. As soon as we'll have more information to share, we'll be happy to kind of reach out.
Problem. I understand the date is not out yet, but we were just discussing among ourselves that probably what could be the possible proceeds used. I can see that you of course your super app, we've seen how it is actually engaging, and it has only increased the engagement level, the growth which you used to do. From here on, what are the focus areas? Maintaining that growth, widening your offerings. What exactly is the immediate focus area for the growth for, say, next 12 to 18 months?
See, when we started this journey, just not only getting into discount broking, but also rebranding ourselves. I mean, we made a promise, to ourselves and our all stakeholders that, fundamentally we are growing into a tech platform which can give multitude of fintech experiences to our customers, and in a cost-effective manner, in a manner which really helps them, to realize their financial goals. And with that journey in mind, we launched Super App, and you have seen how we have been able to migrate all our customers in a single quarter for a large business like ours. And now we are seeing the confidence, and you have seen all our numbers. We're a listed company, so all numbers are published month on month, quarter on quarter. So we've been able to maintain our trajectory. And also now we're getting into newer fintech experiences, which are in different stages of development, be it lending, be it AMC, be it wealth, be it mutual fund and insurance distribution to the next level. So for such a growth momentum, it is important that not only we are able to cross-sell and upsell our customers, but if it is possible to profitably acquire customers, and this kind of momentum can continue, it's in the interest of all stakeholders that we pursue such opportunities. So we believe the current opportunity of IPL really gives us a roadmap or kind of a headroom for next 5 years, and that's the reason why we decided to associate with it.
Mr. Prabhakar, and just one more question is that in terms of tier 2, tier 3 cities, how is the growth and expansion there as well then?
See, as we have been maintaining from very beginning, since we went into discount broking, then COVID happened. Then after COVID, after this has been many years of COVID, and see, tier 2, tier 3 will continue to participate, and there is no secret there, honestly. if you look at young population and the chunk of population which has aspiration, which is getting access to newer things, including the fintech access to capital market, tier 2, tier 3 will be the natural beneficiary of this digitization and financialization that we speak about. And, and hence they will reach out to more and more app-based business like ours.
Prabhakar, thank you so much for joining in with us, and we'll connect with you after the board meet for the fundraising is over to get in more details after that as well. So thank you so much for joining in with us.
Thank you for inviting me. Thank you very much.
Okay, that was the management of Angel One joining in with us. As of now, let's look at what the market is doing. 22,150, almost near the day's highs, 0.6% of uptick is what we're seeing. Vaishali, let me come to you. In terms of any of these names that you find exciting in the brokerage side, maybe something like an ICICI Securities, Angel One, anything on the charts looking attractive?
So I think Angel One has been doing very well, and I think right now also it has corrected and come towards a 200-day moving average support level. So which makes a good buy at these levels, because I think it comes to be a favorable trade with limited downside. So 2400 levels could be the support. So anything below that would be negating my view. But from here on, it can be a good buy to retest the highs of 3000 to start with. So it's a positive view for Angel One.
Okay, Vaishali, that's the view on Angel One. But with that, let's just slip into a very short break. Don't go anywhere. After the break, we'll be taking you all through what the market is going to be doing in the next half an hour.
Back with closing trades right here in ET Now, and having a fab finish come in for the markets this Friday afternoon. We're doing pretty well. We're closing in at the high point of the day. But here's an ET Now exclusive, and we're learning from reliable sources that the government believes that there is strong growth visibility for the economy for at least next 3 years, and that is quite reflected in the buoyant stock markets. The government, in fact, is not in favor of any regulatory intervention in the market as well. My colleague Prakash Priyadarshi joins in once again on what he's picking up on this story. Prakash?
Yes, we are learning from our sources that the Finance Ministry is not in favor of any regulatory intervention in the stock market. We are given to understand that the government is of the view that over-regulation of market can lead to market nervousness. Therefore, Finance Ministry in favor of free market mechanism. Sources are also saying that the government is committed to predictable and a simple tax regime going forward, and it believes that the fundamentals of the Indian economy are robust. In addition to that, sources are also indicating that the government are in favor of increasing participation of retail investors in the stock market, and there is predictability of high growth in the Indian economy for next 3 years. Along with that, we are also given to understand that the government is of the view that we have reached at a position where financial savings are now migrating to financial market, and stock markets are reflecting the fundamentals of the market.
Okay, thank you so much for that, Prakash. And obviously, that buoyant up move, which we're seeing in the markets is something that is very interesting. Kunal, when you have to look at anything exciting in the mid and small cap, you've seen that run up already come in for these companies as well, these stocks as well. What is the view now that you have on the mid and small cap? If you read the charts, is that something that we could expect that run up to continue or, come back again?
See, I think if it's for the PSUs, then I would believe for many of the PSUs, the run up is just started off. So I think after a 30% odd correction for many of the PSU names, many of these stocks are showing signs of strength again. There is volumes backing the move. So what I like about the charts and the recovery for many of the PSU stocks, that it's not on the feeble volumes or low volumes where you're seeing recovery. The volumes are pretty much on the higher side. The moves are sustainable. These stocks, so for example, a stock like Engineers India, which was up 10% yesterday, was start off the day on a very softish kind of a note today. But then the stock has managed to get into a recovery phase so far. So it's now coming back into the green. So this is probably an indication that when you see such strong up moves and very less retracements on the downside, that's an indication that the trend should sustain for these stocks. So bullish on the PSU basket amongst the mid caps and small cap names.
Right. Okay, that's the take coming in on the overall market sentiment. In fact, let me bring on board Mayuresh Joshi as well and find out what he's making of the market right now. Mayuresh, hi, afternoon. Good to have you on the show as always. I don't know if you caught my colleague Prakash highlighting what he's picking up from his sources that the finance ministry is not in really favor of regulatory intervention in the markets and is talking about strong growth visibility for the Indian economy for at least the next 3 years to come and a buoyant equity market thereof. In lieu of that, would you say tactically one should be extremely bullish on PSUs and maybe not bother about valuations at this juncture?
Afternoon, Aisha. I think two aspects here. One, I think if you look at how India is placed, both from a macro and a micro perspective, obviously, I think most of the parameters that you're probably looking at in terms of the fiscal deficit and the current account deficit as a number to start with is looking very, very buoyant at this juncture. And the expectations in terms of the glide path that the Exchequer has put forth in the next 2 years, getting fiscal deficit close to that 5.1% mark, is going to be an extremely attractive figure as far as foreign investors are concerned. The second aspect, obviously, in terms of very stable tax collections, we probably see the number come out. Direct taxes have increased almost 19% year on year. The assumption that the Exchequer has also taken for the next financial year, a little bit on the lower side, both in terms of nominal GDP and the tax collections. But I think even if we are able to continue this growth going forward, and the expectations in terms of the huge capex spend that the government has embarked upon, expected to continue over the next 5 years, the expectations of private capex coming in, the expectations in terms of gross fixed capital formation going northwards, these are all positive signs in terms of how the micros will then play out. Corporate earnings have held up pretty well. Corporate leverage is probably at the lowest level that we've probably seen in a decade. The banking NPAs are at the lowest level that we've probably seen in a decade as well. And therefore, I think the robustness in terms of micros also will play out. I think the growth story for India continues, Aisha. To answer your question on the PSU pack, structurally, I think over the next 5 to 6 years, whether you take PSU defense as a theme, whether you take PSU PAR as a theme, PSU banks as a theme, I think the first two parts, the PAR and the defense names, obviously have moved a tad bit too much, again, from a valuation perspective compared to its longer term standard deviations, as well as expectations in terms of what can probably go wrong. I think the only thing that can probably go wrong is execution, because the order books that both these sectors carry are pretty robust. The book to bill is extremely strong and having strong visibility over the next 5 to 6 years. But execution miss, if any, might just pull down the valuations because the price movement has been too sharp. So within this pocket, our take at MarketSmith is that PSU banks still offer a reasonable amount of risk reward. A lot of cleanup has probably happened. As the rate cuts will start happening through, even in the Indian context in the second half, the NIM expansion will be very, very obvious. And the expectations in terms of reasonable advances growth, deposit growth continues for this space, along with strong provisioning and capital adequacy for a few of these banks. So I think Bank of Maharashtra, Bank of Baroda, State Bank, any pullbacks, I think PSU banks within the PSU theme offers a little bit of a better risk reward scenario.
Thanks. Within the PSU theme, let's keep it with that PSU theme then and listen into what Sandeep Tandon, Gautam Duggad as well as Nilesha from Envision Capital had to say on the PSU basket.
We have been talking about value as a thesis, and obviously PSU qualify as a value thesis right from September 2021. So it'll not be, we were relatively, as compared to somebody is looking at the top, we are very early in identifying that inflection point, and I've been very bullish for last more than 2 years now in this space. But we remain very constructive. If you look at the larger picture, we are looking for the PSUs, okay? Neither we get too complacent about the move which we happened very recently, nor we get too tense about what happened in last 2 or 3 trading sessions.
That valuations are expensive for mid and small caps, but it's not correct to say that the entire mid and small cap basket is frothy. Allow me to explain that. Midcap index right now is trading at around 30% premium to Nifty. Nifty is trading at close to 19.5 times 1 year forward now. And mid-cap index is trading at somewhere about 27 times, which obviously is very expensive. Small caps are also trading at expensive valuation at an index level. Usually the average of small cap, if you look at the comparison versus Nifty on a 10-year basis, the long period discount is about 24%. Against that 24% discount, today it is trading at a 10% premium to large cap. So clearly, when you compare at an index level, and we use NSE Midcap 100 and NSE Small Cap 100 when we do comparison of these baskets. So on that basis, definitely things are expensive.
But I clearly believe that PSUs are in for some kind of a more long-term re-rating. They have kind of re-rated meaningfully. It's quite possible that over the course of next maybe couple of months or so, if there's further correction, I clearly believe that even in the large cap space, the PSUs do offer a great opportunity. And post the elections, if a fresh bout of reforms come in specifically directed at driving more efficiency,
Well, we are back with the latest edition of Times Now Summit. Over the years, Times Now Summit has been championing pertinent national agenda points where India's leadership, leading thinkers and national influencers come together to define the action plan for India's progress. Themed India Unstoppable this year, we're going to be focusing on charting India's remarkable journey and its increasing influence on the global stage. So join us on 27th and 28th of March in New Delhi and watch the who's who of the political corridors share with us their views.
Dive into which are these volume stock, action stocks today in trade. Ansh is here with the selection of 3 stocks. Ansh, what's on your radar today?
So Indus Star is on our radar first. So the stock has given a breakout from cup and handle chart pattern, advancing for 5th consecutive month, and it has gained over 50% in last 5 months itself. Apart from this, Trident will also be in focus as the stock has given a breakout from its downward sloping resistance trend line, advancing for 2nd consecutive session, also with volume of over 3 times as compared to its last 20 session average. Lastly, Allcargo Logistics will be in focus. As you can see in the chart as well, the stock has given a good decisive breakout from its downward sloping channel with substantial volume of over 10 times its average trading volume of last 10 sessions, and the stock has registered its biggest single session gain in over a month. So these are the breakout stocks based on price volume action.
Thank you so much for that, Ansh. But let's keep it going then. And Vaishali, I want to talk to you about Indus Towers on the charts. How is that looking like? We've been seeing that it's buzzing in trade for the last couple of trading sessions as well, at least this week. On the charts, how is Indus Towers looking?
Well, it has shown a lot of strength and it is continuing to show higher top, higher bottom formation. Today also, it is crossing the previous high of 260 levels. So I think the stock looks pretty strong even now, and one can hold with a trailing stop loss. I think in all likelihood, the stock can go towards 280 to 90 levels.
Okay, that's Indus Towers in trade for you. Couple of other buzzers today. Of course, Indus Tower and Idea are both holding out well. But autos, and it's specific, the two-wheelers as well, are pretty charged up. Vaishali, Hero MotoCorp, Bajaj Auto and TVS. Where is it that you would want to go fresh long?
I would say Hero Moto because it has shown a lot of strength today. And in fact, we have recommended also in our as an intraday trade. But I would continue to stay bullish on this because today's volume, today's candle shows a lot of strength. I think this is poised for a target of maybe 4,900 to 5,000 levels from here on.
I want to talk about the real estate sector, right? And, where do you see the realty space moving? We've seen a very good run-up here. Today also, we are seeing a run-up coming in. We have brokerage notes on Brigade Enterprises, Prestige Estate, the land that they've acquired in the NCR region. Because of that, we've seen both these stocks buzzing in trade. Where do you think there's still value left in the real estate sector and, it's time to still look at it?
So, Vinny, was that for me?
Yes, Mayuresh, for you.
Sure. Afternoon, Vinny. So I think the real estate pack has moved up quite significantly. And again, I think we're in the midst of that 6-7 year cycle that we are speaking about as it typically navigates through this cycle. You're going to get your patches of some kind of downturn that these stocks will face. But two things that I clearly watch out specifically for the entire pack. One, I think in terms of the inventory built up that I've been reading through across tier 1, tier 2 towns. I think that has started to build up because of oversupply that is probably happening. specifically in terms of a lot of redevelopment that are happening in urban and semi-urban areas. So I think this is one aspect from a risk perspective that I'll probably watch out. And the second element is in terms of any input cost inflation that probably comes through. But I think to offset this again, I think when we talk about interest rate cuts happening, because it is extremely sensitive in terms of how the rate cycle will probably move. And a lot of borrowers are probably even looking at this rate cycle very, very intently. Any move on the rate cuts by the RBI in the second half of this calendar year will definitely bring in more amount of strength to the sector as a whole. So I think within the space, again, very frankly, anybody holding on to a DLF, a Godrej property should continue holding on. But ancillaries, Vinny, is something that one should focus upon. So to that extent, our take is plywood players, laminate players, Greenlam laminates as an example, Century plyboards as an example. I think a lot of input cost inflation had hit their margins really hard in the last 3 to 4 quarters. I think they're just coming out of that entire inflationary scenario. And as the deflationary aspect gets played out on the margins, along with expectations of very stable volume growth that comes through and strong operating leverage getting played out, these ancillary stocks should start showing some element of strength. Again, the housing finance companies, as an example, PNB Housing. Very frankly, I think if you probably look at the entire construct, whether it's PNB or LIC Housing, again, if you bind that with the rate cut scenario, I think a whole host of expectations in terms of further movement when it comes to the individual disbursements. Asset quality pressures have come down for both these players quite drastically. And I think that entire perspective can also get played out through the housing finance route. So my take is that anybody holding on to the core real estate players can hold on. But the ancillary players is something where any pullback can be seen as buying opportunities.
Since we're talking about the entire realty pack, let me take it across to Snehi as well. Prestige has announced its foray into NCR. Let's try and understand what exactly is the consideration and what it would mean for Prestige, which is now expanding its portfolio into a newer geography.
Well, yes, so Prestige Estates is a stock that is in focus today and is doing pretty well because the company has announced the acquisition of 62.5 acres land parcel in Indirapuram extension in NCR, and this marks its expansion majorly into NCR, where it already has hotel projects under construction as we speak. Now, this project is not only residential in nature but also is a blend of educational, retail and recreational spaces as well. Now, Prestige has committed 468 crore rupees plus a revenue share for the acquisition of this land parcel, which will likely have a saleable area of 10 million square feet and a gross development value surpassing 10,000 crore rupees. This is what the management says. Now, the management is also looking to launch the project within the next 2 quarters, and the project will be completed in the next 4 years. Now, why is this a big development for Prestige and why is this panning out on the stock in such a positive way? Prestige had in its earnings call, remember, they had announced its intent to enter into the NCR market. And the upfront commitment seems small. The project completion timelines also look aggressive. However, if Prestige is able to deliver on this land parcel that they have achieved, and if they are able to perform like they have done in Mumbai in terms of their sales and recent foray into the Mumbai market as well, they will become a very key pan-India player after this expansion. So, well, that is why Prestige Estates is in focus today on the back of this land acquisition and the further expansion that they've done in the NCR region.
Thank you so much for that, Snehi. Let's just take a quick look at the market right now. What we're seeing buzzing in trade is L&T, ICICI Bank, Maruti continues to hold on, as well as we saw some recovery coming in even in ITC. So pull up the charts for ITC as well. That's a bit of a run-up coming in as well. Yes, keeping an eye out on that. And Sun Pharma today, so the Pharma pack has been buzzing as well. So Sun Pharma, Cipla, all those names are doing and holding on to good gains as of now. But what's buzzing in the dealing room? Sharath is joining in with us to give us more details.
In focus is Lakshmi Organics, and this is a cash stock, and over here what we are hearing from dealers is that HNI buying is coming in across several counters. Even the volumes, that number has also picked up almost 30 times its 20-day average, and we did a channel check for the stock itself, and what we are getting from the dealers is that there is a rising demand coming from the textile and the dye pigment segment, and importantly it's a raw material for the textile segment that has actually picked up. And if you look at the month-on-month basis, as per our channel checks, there has been a 25% increase when it comes to the demand. Also, the second part what we are hearing from our channel checks is that the demand is increasing for ketene and diketene for this company. And importantly, these two products are nothing but the finished goods of the company. So of course, the raw material consumption is increasing for one category, while also finished good consumption is also picking up, and that is why there is a fundamental buzz happening around the company. And also, HNI counters have been busy in the day.
Oh yeah, 8.5% of a bump up coming in on that stock. In fact, I want to just check in on some of these other buzzers as well and show you where exactly the big moves are. While of course, the large caps are doing whatever they're doing, but you are also seeing some serious amount of short covering in a Laurus Labs. Look at that stock; it's spiked up about 3.25%. Piramal Enterprises has had it going very good today. Both Syngene and Biocon are holding up very smartly. There's Laurus Labs as well, which is up 3.25%. So some of these stocks are looking pretty good in trade right now. Of course, like we've been pointing out, Idea, Hero MotoCorp, Maruti, all looking smart. REC has been seeing a second consecutive day of some good traction today. So another 3% higher for REC as well. HAL is looking very smart. Hindustan Aeronautics, that is. That stock is holding up 3%. PFC in tandem with REC, that stock higher by about 3% as we speak right now. United Spirits is holding out very well as well. But as a trend, Mayuresh, some of these pharma names, and just very specific names at that, are beginning to now look up. Anything that you would like from this space?
So Aisha, we continue holding on to Sun and Dr. Reddy's in our global portfolio. So that's a very clear disclaimer. What we also would like to put on our buy watch list on any pullback would be Natco Pharma within the broader markets. Now, our take for Natco Pharma is that the branded generics market and the FTFs that Natco Pharma has, the paraphors, around 14, 15 in the pipeline across the therapeutic chain, whether it's oncology or diabetes, where the expectations in terms of pricing and margins both are expected to remain strong as approvals come through in the next few quarters. Obviously, the kind of margins that Natco works around, there was a dip in margins in the previous quarter at 38.5%. But the large part of the market participant belief is that the margin should stay around that 39 to 40% range. Now, with more launches expected to come through in the next few quarters, better margin launches with strict timelines, my take is that numbers should show significant amount of earnings propensity on the higher side, and therefore top line growth, margin expansion will lead to a EPS growth, which is quite significant over the next 2 to 3 years, both in terms of the EPS and RS rating and as per the canceling parameters that we see at markets. With any pullback onto this stock can be viewed as a buying opportunity.
Vishali, some specific names, PFC, REC, and then of course a big move coming in on HAL as well today. Any tradable opportunity here?
I think REC was a good opportunity yesterday. After we saw a good fall coming in, above 430, it was showing a lot of strength. So it has already given a good bounce, but I think if it sustains above 465, it would be furthermore strength. So I would say that it would be better if you buy a bit in decline closer to 445. So we can look for a target of 500 and plus. And HAL, of course, if the trend is very bullish, we continue to have a positive view. The stop loss lies at 2950, and we will be looking at a target of 3400.
Okay, we're not bad at all. We've almost seen a 190-point recovery from that opening low today, and from there it's really been a very gradual move up. Although we're closing off the day's highs, but that's okay. That's only, just a little bit of a closing adjustment going into the weekend, and of course the truncated week next one as well. But Kunal, only 3 trading sessions next week, financial year close, expiry, etc. What do you think is going to be the pattern for the Nifty?
I think it should still be on the bullish side. So I think most of the corrections behind in the mid caps, small caps, we've seen the large caps initially shielding the market from or the indices from a major correction, and then on the way up when the mid caps and small caps are recovering, the large caps are notably underperforming, which I believe could be a decent phenomena, which could probably indicate that maybe the large cap stocks could remain into a balanced kind of a territory. We may not see any strong trends as such emerging into the large cap stock, except for few names like L&T, ITC, etc., where I would believe that there should be some stronger trends building up. But I believe largely as a pattern, the major part of the volatility is behind us now, because the India VIX falling below that 200 EMA 13 levels, all of that patterns, those triggers are very positive for the markets. And considering the point where generally pre an event, a major event like election, we actually expect the India VIX to rise up. So if there is a gradual as well as a sharp fall which comes by pre the event, that indicates that the markets are not expecting any heightened volatility.
Okay, that's the call coming in on trade next week, but let's get in some BTST ideas as well. Vaishali, what's on your list?
So one of them is BEL, because I think that stock has shown a lot of strength since quite some time. So I have recommended this stock with a stop loss of 194. My target would be 202. That is one of the stocks. The other one that I'm looking at is also Canara Bank, because in the mid-cap category, Canara Bank has been showing a lot of strength. So I would say, well, with a stop loss of 568, this can go to 588. So these are two of my BTST trades.
Okay. Kunal, what about your strategies?
So I'll go with the BAN Engineers India. After yesterday's 10% up move, the stock is a lot more somber today. So expecting this to be a very strong up move over the next couple of days. So buy with a target of 205, stop loss at 188. And Jindal Steel is something which I've been bullish on. The stock is almost now at 830, 840 levels. So looks attractive even from current levels. Would continue to hold on the bullish view. Targets remain at 880 and stop loss I'm revising it from 770 to now 800.
Right, okay. Let's begin winding up for the week and the day. Let me take it across to Vinny then and hand it over for the closing trades.
So absolutely seems like at least today we'll be ending on the positive note. 0.3% of gain off the day's highest point, and even the week that the Nifty will be closing for is almost a 0.5% uptick for the Nifty for the week as well. When you're looking at it in terms of the top gainers that one should watch out for the week will be Tata Steel, Maruti, those leading the gains. And today itself, when you look at it, the auto players have been doing quite well. So Maruti, Hero Moto, Bajaj Auto, all of them have been buzzing in today. Other than that, when you're looking at just today's day, we did have the mid and small cap holding on to good gains, better than what the benchmark indices are doing, at least at the end of the day. Mid and small cap are doing slightly better than the benchmark indices. Mid cap up 0.6%, small cap up 0.7%. Realty, Nifty Realty among the top sectoral gainer today, and we do have look at Prestige Estate, Brigade Enterprises, DLF, Godrej Properties, all of them managing to hold on to very good gains. Nifty Realty, when you look at it for the week also, has managed to see very strong gains, and that is why will be closing and snapping its 3-week losing streak will be the Nifty Realty sector. PSUs, let's look at what the PSU banks are doing as well, something like an SBI, what that is holding on to, and Nifty PSU also managing to close on a positive note today as well. SBI managing to close with gains of almost 0.3% in trade. Bank of Baroda, Canara Bank, all these managing to hold on to some bit of a gain on that front. Nifty Pharma, that's another one that has been buzzing in trade today. We do have Sun Pharma, Cipla, all these names buzzing away. While also let's pull up some of these individual names on the back of news flow that we had. IT stocks actually under pressure because Accenture reported its numbers. Weak set of numbers came in from Accenture overnight, and that is why IT was the top loser. In the Nifty50 as well, all these names are falling. TCS, Infosys, HCL Tech, all the mid-cap IT names also down and out in trade. Schneider Electric, that's the one should watch out for. We did see a run-up coming in this stock, almost 13% uptick after some newspaper reports suggested that they will be investing 3,200 crores. So on the back of that, Schneider was buzzing. Amber Enterprises was buzzing after we had a brokerage note from CLSA where they had upgraded the stock to and buy from a previous outperform rating, hike the target price as well. Sarda Energy today in focus on the back of a news flow as well, and closing with strong gains is Sarda Energy as well, gains of almost 10 to 11%, and footwear stocks like Metro Brands as well as Bata managed to see some bit of a gain as well. Lastly, also let's not forget for the week we are seeing that Nifty IT actually hit a 2-month low this week, and that was a top sectoral loser, down 6% for the week, and clear pressure coming in on Nifty IT for the week. We have Coforge, Infosys, which were declining the most in the Nifty IT pack. FMCG also saw a very sharp decline decline as well. Second consecutive week of decline that one could be watching out for from the FMCG pack. Tata Consumers, HUL among the top losers in the FMCG pack. Other than that, Nifty Metal, that's a very, very good run up this week. National Aluminium Company, that's Nalco, Jindal Steel, all of them were buzzing away in trade. Yesterday, a bit subdued, but all these stocks saw a good run up during the week. And that's how we're going to be wrapping this edition on Closing Trades, this week's edition of Closing Trades as well.
If you like this video, then like, share and subscribe to ET Now.